Welcome to Bears in Exile. Today is October 17th, and it is time for the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, we started getting the movement that we've been expecting in the market. It certainly has taken its time getting here. I did think that it would happen prior to today, but it is what it is. We have a big nasty red candle, of course, and we have a downtick. Downtick gives us an estimate round about 11,300. But we also have to consider that we have the bearish bar, and finally, maybe, it is acting the way that it should, which is to suck something back in because it is not collapsed. So, is this going to be a complete bar failure? Well, this thrust certainly is going to do some damage to it, absolutely. And until the short-term moving averages are expelled from it, we can assume that it is going to continue to take damage. Of course, we need more information. This is all Eurolens doing. And beyond that, what are we looking at? Well, we have the downtick on the CCI, which is good, getting out of overbought territory. We have the hook on the slow stochastic to match the fast stochastic. We've been looking for that for a while now. What we want to see at this point is for them to head on down, meet up with the 14-day RSI moving average, and either meet up with it and turn around, or even get below it and turn around and then continue on its way up. You will notice that it is still pointing up. So this is good. Downtick on the RSI, downtick on the histogram, and side tick on the MACD. So this is finally doing what it should. Now, so on some of the other charts, we're going to see some other things to look out for. But just to point out also, 60-minute time frame, we had been talking about the negative divergences, and now they are working themselves off. We had them in just about everything, so we knew a down move was coming. It's just difficult to pinpoint to the day when it will occur, which has been our problem leading up to today. SPX, of course, more of the same. No need to rehash all of that. Everything that applies to the Dow applies to SPX. And you will notice that we closed below, actually maybe right at, nope, it's just below the upper price consensus level. And if we are going down to test the major, we're looking at 1170. And since we have a downtick today, we do have a downtick target around about 1183. So if it's just going to do a little bump and then continue on its way, that's what I would be looking for. Certainly after a big down day, we don't have to be down huge tomorrow, but that would be nice. One noticeable exception relative to the Dow is that the MACD has not rolled over. It was sideways on the Dow. It is still pointing up on SPX. Now, why do I say that this is, it could have maybe a small update tomorrow or a sideways move or something like that? Simply because the VIX was up so much today, 18%, might as well count it as 20. Yes, we have an uptick. It was not met intraday, came close, and we have 4 days for that to resolve. The bullish bar is starting to collapse, but it does have some form left in it, so the suction effect hopefully will bring it above 35, which would be round about the lower price consensus level. If it has a negative reaction at that point, I might be a little bit concerned. but we're going to see over the next few days. Of course, uptick on the CCI, both of stochastics, RSI, histogram, side tick on the MACD, and the fast stochastic is already meeting the 14-day RSI moving average. So, which, you know, it's not too far away from being oversold, but still, it would be nice to see the stochastics go all the way up, or close to, and then turn around, let the 14-day RSI moving average finish out its cruise to the bottom, and then decide what to do with itself. TNA down 9.5%. You'll notice that compared to the Dow and the S&P, how much weaker this is. We didn't even really blow this up a little bit. We didn't even have complete separation of the short-term moving averages going into the bar. Yes, it did manage to get above the major price consensus level once, but yeah, we already have rejection. This does not look good. Does not. And you'll also notice the 14-day RSI moving average. Yeah, it has a little bit of an uptick today, but its angle is poor, and the stochastics are going down to meet it, presumably to meet it. And the star of the show, UUP. Okay. We did have pretty decent penetration of the bar by the short-term moving averages, even though we did not have complete crossover and separation entering into the bar. We did get below the 200-day moving average that was closed above again today. And that 14-day RSI moving average in a very bad spot for UUP. We have been saying that we have been wanting and have been looking for a move up by the stochastics, both of them, to meet up with the 14-day RSI moving average and then let it continue and finish its move down. So, while I do expect a move up, I do expect a move down shortly thereafter. So, we've got a turn on the histogram, MACD still pointing down, uptick on the RSI, uptick on CCI. Yes, this is massively oversold, but I do expect it to be oversold again in the not too distant future, but a pop here is more than warranted and welcome. FXE, very, very nice. We have that problem with the short-term moving averages and their entry into the bar. Yes, it got above the major price consensus level. It actually got so darn high, I couldn't believe it. You know, 1.39 for the euro. That's pretty ridiculous considering how crappy Euroland is right now. So at least we got our downtick today. It's, you know, nice red candle, almost a spinning top. It has little buds on the top and the bottom, but CCI ticking down, RSI ticking down, stochastics ticking down. Got the hook on the histogram, MACD still pointing up. 14-day RSI moving average, you know, that needs to get out of the way before we can have a really good move down on the euro, and it has so much room to move once we have the stochastics lined up with it. But beyond that, I mean, it is not attractive from the perspective of Guppy, because if it goes down a considerable, you know, amount and we get a cross of the middle Bollinger Band, that is a bar test failure. And so going down a decent amount, maybe even perhaps to test the floor and then to bounce off of it, that would be fine with me. Certainly that's a long ways to move, but the stochastics have a long ways to move. The 14-day RSI should help cushion that to some extent, but I do expect it to go to the top unless we start getting a curl on it, and it's going to take a lot of damage to do that. So for that, way too early, but hypothetically speaking, it's possible. I certainly think that the euro has gotten way ahead of itself, and but the moment that we get to QE 5 or 10 or whatever it is, absolutely euro going up. GLD second VIX. Yeah, this is not really attractive. We had talked about it going into a double flatline. It certainly would appear that that is what it's doing. We do not like double flatlines. Certainly the stochastic is high. If it goes down all the way to the bottom, it'll have perfect alignment with the 14-day RSI moving average for a really, really good move up. Now, this is early, but still, we do want to anticipate the future and have some opportunities because of it. So while this is a double flatline, and certainly it looks poised to go down some, if it's able to get everything down into oversold and it hasn't breached the floor, that's fantastic. Absolutely. And SLV, there you are. Not, we still have the bearish bar. We're still below the 200-day moving average. Interesting how the fast stochastic is already halfway down, and all the other secondaries don't have as much room to move as with gold. So, similar to gold, if it's everything's able to get to the bottom, and we haven't breached the floor, I consider that really good. I guess there's not too much else to say tonight. I haven't been in the daily running thread nearly as much as I normally am. I'm getting slammed at work. It's probably going to be that way all week. So I will try to make as many entries as I can, but they will be somewhat subdued this week. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.